Welcome to the Deep Dive. We cut through the noise, pull out the key nuggets of knowledge, and help you get well-informed fast. Today we're diving into Turkey's latest economic picture. We're using a really interesting weekly financial bulletin for June 30th, 2025. It's a comprehensive analysis prepared by Hakan Çalışkantürk for 2 Black Dot. And our mission today is really to unpack this core idea from the bulletin. Essentially, the issue is always between 2 points. We're going to explore those contrasts, the paradoxes in Turkey's economic story right now. Think millionaires versus, reality.
Indeed. And it's fascinating because the data really does paint a nuanced picture, sometimes contradictory. This deep dive should give you the critical context, help you understand the forces at play, both in Turkey and, how that connects globally. It's about seeing behind the headlines.
Okay, let's jump right in with this pretty surprising headline. It's from the UBS Global Wealth Report 2025. It says Turkey had the highest increase in dollar millionaires globally in 2024. An 8.4% jump. That's 7,000 new millionaires? Now, on the surface, that sounds amazing, right? Wow, booming prosperity.
It does sound amazing. But, it's fascinating because it creates such a stark contrast with, other figures in the same report. While that number, the number of dollar millionaires, did jump, the report also shows that real wealth in Turkey actually decreased quite a bit, by 14.6%. And median wealth, that plunged by a huge 21%. Median wealth often tells you more about the average person's situation. So this points directly to something the bulletin calls an asset-rich but cash-poor structure. Think of it like this. Maybe you own a house, its value shot up in lira terms, but your actual income isn't keeping pace, maybe even falling in real terms. You don't feel richer day to day.
Okay, right. So it's not quite the broad boom that headline suggests. What's really driving this illusion then? How do you get more millionaires if real wealth is falling?
A really major factor is the huge depreciation of the Turkish lira. The bulletin notes it's depreciated over 83% in recent years. That's massive. So what happens is, as the lira loses value against the dollar, the value of assets priced in lira, especially things like housing, land, it just skyrockets in nominal TL terms. Someone might own a property worth, say, 10 million lira a few years back. Now, maybe it's valued at 30, 40 million lira. But because the lira has weakened so much against the dollar, that 30 or 40 million lira might just push them over the $1 million threshold, even if the actual buying power of that asset, domestically hasn't kept up. Or maybe it's even fallen. People cross the line in dollar terms, but not necessarily in real wealth terms.
That really brings up the distribution question, doesn't it? If it's mainly asset inflation from a falling currency, who's actually benefiting here and who's, not?
Yeah, and this is where the picture gets quite worrying. The bulletin points to a dramatic rise in income and wealth inequality. Turkey now ranks 9th globally in wealth inequality. The Gini coefficient is 0.73.
Wow, 0.73, that's high.
Extremely high. The Gini near 0 is perfect equality. 1 is perfect inequality. So 0.73 signals really deep divisions, potential economic, political, even social problems brewing. And crucially, a lot of this nominal wealth, it's tied up in illiquid assets, houses, land. Only about a third of total wealth in Turkey is in financial assets, like stocks or bonds. Compare that to over 70% in the U.S., or nearly 80% in Sweden. So people might look wealthy on paper, but they can't easily turn that house into cash for everyday needs or investments. It reinforces that cash-poor feeling.
So let me see if I've got this. Homeowners, maybe those who got cheap loans, they saw their paper wealth go up. But middle and lower income folks, renters especially, they got hit because wages didn't keep up with costs, like rent hikes. It's almost like inflation itself is shifting wealth upwards.
Precisely. That's a good way to put it. Paul Donovan, he's the chief economist at UBS Global Asset Management. He's quoted in the bulletin saying exactly that. It's asset-rich and cash-poor. Real wages are falling, even while house values are nominally climbing. And the bulletin shows this too. Average wealth, across everyone, went up 20% between 2020 and 2024. But median wealth, the person right in the middle, it increased far, far less. That gap, that growing gap between the average and the median, that's a classic sign of rising inequality. The gains are really concentrated at the top.
Okay, that's a really sobering look behind the millionaire headline. Let's pivot a bit. What about the broader economic pulse? The bulletin mentions the transition to TL seems to be weakening. What does that mean for us listening and for the economy itself?
Right. It basically means the official push to get people and businesses to hold Turkish lira instead of, say, dollars or euros is facing some difficulty. Looking at the week of June 20th, TL deposits did go up a bit, about 37.6 billion lira. But FX deposits, foreign currency deposits, they barely budged. They only decreased by about $500 million US after adjusting for exchange rate changes. So that suggests people are still holding on to foreign currency, either because they prefer it or they feel they need to hedge against the lira falling further. It challenges that policy goal.
And speaking of confidence, or maybe lack of it, the bulletin uses the stark phrase, trust is fragile. What are the signs pointing to that fragility?
We see it in a few key places. The Real Sector Confidence Index, that's manufacturing sentiment, it's at 98.4.
Below 100.
Exactly. Anything below 100 signals pessimism. Businesses aren't feeling great about production, orders, the general climate. Capacity utilization, how much factories are actually being used, that's also down a bit, 74.4%. Now, interestingly, the Financial Services Confidence Index, that rose to 171.2. So there's some optimism in banking and finance. But the real economy, the part that makes things and employs most people, clearly struggling with confidence.
Okay, so if businesses are pessimistic and people are maybe sticking with foreign currency, what does that do to inflation expectations? Are people bracing for prices to keep climbing fast?
Well, the expectations are all over the map, which is actually a problem in itself. It makes planning hard. The financial sector, they expect inflation around 24.6% over the next year. Still high, but relatively lower. The real sector, the businesses, they're expecting almost 40%, 39.8%. But households, the general public, they expect a much higher 53% inflation rate over the next 12 months.
Wow, that's a huge spread.
It is. It suggests very different experiences of inflation and maybe a lack of shared belief that it's going to be brought under control quickly. Now, looking at money flows, portfolio flows, there was some good news. An inflow of about 685 million USD into government bonds, GDDS. So some investors are buying Turkish debt, but at the same time, money flowed out of the stock market. About 109 million USD left shares. And net reserves, excluding swaps, they also dipped slightly to 30.2 billion USD. So managing foreign currency remains a challenge.
Okay, let's shift our view now to the global scene. The bulletin mentions mixed signals from the U.S. Why are U.S. signals so important for Turkey, and what should we be watching?
Yeah, the U.S. economy is definitely sending mixed messages right now. What happens there has ripple effects everywhere, especially for emerging markets like Turkey. On one hand, you've got inflation that's still sticky. The PCE index, which the Fed watches closely, was up 0.2% month on month, 2.7% year on year in May. Still above target.
Keeping the pressure on the Fed.
Exactly. Pressure to keep policy tight. But then you look at growth. First quarter U.S. GDP actually contracted, minus 0.5%. That suggests slowing. Jobless claims are also relatively high, around 223,000. A sign of maybe some labor market cooling. PMI data is okay, around 52, still growing but not booming. And consumer confidence, the Conference Support Index, that dropped to 93.0, lower than expected. Consumers are getting nervous. So this mix, it creates a real puzzle for the Fed, right? Fight inflation or support a slowing economy. It makes their next interest rate moves really uncertain. And that creates volatility globally.
And how does that global picture, especially this uncertainty and the risk-off theme the bulletin mentions, how does that play out in Turkish markets specifically?
Well, risk-off just means investors are getting cautious, moving away from things they see as riskier. Globally, you saw things like Brent oil prices dropping sharply from $78 down to $67, often a sign of worries about global growth. For Turkey, the exchange rate, USDT RAI, was actually pretty stable that week, around 39.86.
Okay, some stability there at least.
For now, yes. But look at the stock market, the BS 100. It was up 3.2% in lira terms, hit 9,404. However, the bulletin notes it's hitting resistance when you measure it in U.S. dollars, and that's key. It means the lira gains aren't fully translating into dollar value for international investors. Again, that currency effect. Turkey's two-year bond yields also dipped a bit to 38.18%. So overall, you have this cautious global mood combined with these mixed domestic signals. It suggests investors are being watchful, even if some TL numbers look positive.
So putting this all together, it's a really complex picture. The headline, millionaire boom versus the tough underlying reality. Where does Turkey go from here? The bulletin talks about risks, but also opportunities.
Yeah, and the opportunity side, the positive potential, the bulletin highlights the ongoing efforts to strengthen the lira, the transition to TL. It's tough, but vital if they can make progress. There's also the chance for some portfolio inflows, foreign investment if global conditions improve and risk perception about Turkey eases, and a really big one globally, the potential end of the interest rate hiking cycle in major economies. If the Fed and others start cutting rates, that could take pressure off emerging markets like Turkey, make dollar assets less attractive comparatively. That could provide some breathing room.
Okay, so some potential positives, but it sounds like the risks are still pretty significant, especially tied back to that illusion of wealth and inequality problem.
Absolutely. The risks are substantial. High exchange rate pass-through is a big one. Any further weaker. Lira weakness quickly feeds into higher prices, fueling inflation. Hard to break that cycle. Then there's the wealth inequality itself, which we've discussed. That's not just economic, it carries social and political risks too. We're also seeing signs of weakening domestic demand and industrial production slowing down. The real economy is feeling the strain. And the bulletin's strategic note really underlines this. You've got slowing global growth meeting weak real income growth inside Turkey. That combination increases social pressures and puts more strain on financial markets. That apparent wealth increase for some, it's not really hiding the social tensions or the squeeze on demand for many. It might even be making it worse.
Given these really deep structural issues, what kind of solutions does the bullet propose? How can Turkey maybe shift towards a more sustainable, more equitable path?
It lays out several crucial reforms, really structural changes. First, a national financial literacy campaign. Sounds basic, but empowering people to make better financial decisions is key. Second, tackling inequality head-on through wealth tax reform and much greater transparency around who owns what. That ties into redesigning inheritance taxes to be fairer, trying to break that cycle of wealth concentration just passing down automatically, and absolutely critical, adopting a predictable, independent monetary policy. You have to restore trust in the lira's purchasing power for anything else to work long-term.
So stable money is foundational.
Foundational. Then, beyond that, shifting investment, moving it away from just speculative real estate, which drove that illusion of wealth towards productive areas. Industry, agriculture, technology, R&D, things that create sustainable jobs and value. And finally, removing barriers for young people, making it easier for them to get affordable housing, good jobs, access to finance. You have to empower the next generation for the economy to thrive inclusively.
This has been, well, quite the deep dive. It really shows a complex economic scene in Turkey. That headline, "Increase in Dollar Millionaires," it just feels so different when you see the fall in real wealth and this soaring inequality underneath. It's such a powerful reminder, isn't it? Prosperity isn't just a headline number. It's about who benefits, how widely, and what that money can actually buy.
Exactly. You really have to look beyond those surface indicators to grasp the true health of an economy. It brings us right back to that quote from the start. Essentially, the issue is always between 2 points. Here, it's that huge gap between nominal gains on paper and the actual economic well-being for so many people. A real lesson in looking deeper.
And it leaves us with this final, quite provocative thought. It's from the great Anatolian mystic and poet Yunus Emre, quoted in the bulletin. He says, "Property is a lie. Property is a lie. There is also a little bit of you to linger on." Really makes you think about what wealth truly means, doesn't it? Beyond just the numbers, beyond the assets. Something to definitely mull over until our next deep dive.